Morning everyone. Have a great day. I am Prabha. I am handling accounts for you. I am so happy to take class for you. Today we are going to see Unit 30 Final Accounts 2. Okay. In previous class we saw the theory alone, isn't it? Today we are going to see exercise sums 4, 6 and 8. And before that we are going to see illustration 1 to 7. Okay children. After that I am going to do the 4, 6 and 8. Let's see the sum children.
Adjustment, your textbook page number 290. So necessary entries to adjust the following on 31st December 2017. Now we are going to do this journal entries. Okay, outstanding salary is 1200. Already we saw the theory. What is the outstanding of adjusting entry means salary account. What we have to give in the outstanding, that particular account have to debit. So salary account debit to outstanding salaries. Okay, 1200. Second one, outstanding rent. So rent account data to outstanding account 300. Prepared insurance premium 450. Prepared insurance premium account data to insurance premium. Prepared means we have to debit side. We have to shown in the debit side. Next one, interest on investments accrued. Accrued interest on investment debit to interest on investment. So we have to debit the accrued income. So 400. In the bad debts written off. Already we saw the theory. Bad debts account data to sundry debtors. Bad debts means we didn't get any amount to the creditors. Okay children, 200. Let's see illustration 2. Past adjusting entries for the following on 31st March 2018. Charge interest on drawings 50. Write bad debts of 500. Depreciate furniture by 1000. What is the adjusting entry? So drawings we have to calculate one business proprietors. Okay, business owner have to take the business money to the personal use. That particular amount drawings we called as a drawings. So that person take the capital. Okay. So capital account data to interest on drawings 50. Next bad debts account data to sundry debtors. See children, you have to study all the 15 entries journal you have to study. In this chapter it's very useful to you. Okay. So next one, depreciation furniture. Depreciation debits to furniture. Depreciation is one of the loss. Okay. Next one. Illustration 3. Sundry debtors as per the trial balance as on 31st March 2016 is 10,000. What is the adjustment? Write of bad debts amounting 300. Give the adjusting entry and show how these appear in the final accounts. In illustration 3 onwards, we have to write the adjusting entry and how to show in the P&L account, I mean profit and loss account, and as well as balance sheet. Let's see the adjusting entry of bad debts. Bad debts account data to sundry debtors 300. How we are going to show in the P&L account? To bad debts. Okay. Bad debts is one of a loss, one of a expenses. So we have to write on the debit side. So to bad debts 300. How we are shown in that? Bad debts to the balance sheet asset side we have to subtract to the sundry debtors. So sundry debtors 10,000 minus bad debts 300. So totally we have to show in that outer column 9,700. Can you understand children? Next illustration 4. Sundry debtors as per the trial balance to 26,000. Bad debts as per the trial balance 1,000. Adjustment additional bad debts amounted to 2,500. Give adjusting entry and show how these appear in the final accounts on 31st March 2016. So what is the adjusting entry? Bad debts account data to sundry debtors. So see children, again I tell you, please study 50 adjusting entries. Okay. So next how we are shown on that, we know very well. Bad debts is going to enter the debit side of the P&L account. So bad debts account, bad debts 1,000, additional bad debt to 2,500. How we are shown on the balance sheet asset side, we have to less sundry debtors 26 minus additional bad debts in the transaction. In the adjustment we have one bad debts, we have to subtract in the balance sheet. Next illustration 5. And as per the trial balance of 31st December 2016 is as follows. Particulars, sundry debtors 20,000, bad debts 500. Adjustment, create a provision for bad and doubtful debts at 5% on sundry debtors. Pass the adjusting entries and show how these items will appear in the final accounts. See a solution, page number 292. Provision for bad and doubtful debts. If the adjustment they given in the 5% or 3% in the sundry debtors, you have to calculate in that through the sundry debtors account. Okay, so in the sum sundry debtors 20,000. So we have to calculate 5% on this, isn't it? So 20,000 into 5 by 100,000. So you have to write the journal entry in 1,000 rupees only. So P&L account, profit and loss account data to provision for bad and doubtful debts account 1,000. How we are shown in the P&L account? No need to add anything, just you pass it to bad debts. In the sums we have no, in the trial we have 500. So bad debts 500, add provision for bad debts 1,000. Just you apply, no need to add. How we are shown in the balance sheet? In the asset side, sundry debtors minus in the adjustment 5% on a sundry debtors, no, that amount we have to subtract the sundry debtors. So less provision for bad and doubtful debts 1,000. So what is the final account? 19,000 children. Okay children. Next realization 6. Abstracts from the trial balances on 31st March 2016. Sundry debtors 52,000, bad debts 1,000. Additional bad debts 2,000. Create a 5% provision for bad and doubtful debts. You are referred to the past journal entries, necessary adjusting entries, and show how these items will appear in the final accounts. So see here, working note, sundry debtors 52,000. Less additional bad debts. In this adjustment we have 2,000. No, we have to subtract 50,000. In this 50,000 you have to calculate 5%. Always we have to subtract the sundry debtors minus additional bad debts, and that we got a final account. That final amount we have to calculate the provision for bad and doubtful debts. So in this account, in the sums, we have calculated 5% on sundry debtors, isn't it? So 50,000 into 5 by 100. So 5,000, 2,500. What is the adjusting entries? Bad debts account data to sundry debtors 2,000, 2,000, and P&L account data to provision. So bad debts always debit, provision for bad debts always in a credit 2,500. How we are shown in just we apply that bad debt 1,000 and additional bad debt 2,000, provision for bad and doubtful debt 2,500. How we are shown in the balance sheet? Sundry debtors 52,000 minus additional bad debts minus provision for bad debts. So we have to subtract all the additional provision, bad and doubtful debts children. Okay. Next one, illustration 7. Abstract from the following balances on 31st December 2016. See a sundry debtors is the same one, bad debts, provision for. In the sums we have one extra amount of a discount on. Okay, see here additional bad debts amounted for, and create a provision for bad and doubtful at 5% sundry debtors. Pass the adjusting entry. See is a working note. Sundry debtors are 1,04,000 minus additional bad debts for 4,000, 1 lakh. In this 4 lakh, in this 1 lakh we have to calculate the 5% sundry debtors. Okay children. Adjusting in bad debts account data to sundry debtors 4,000, 4,000. Provision for bad and doubtful debts account data to bad debts. P&L account, provision and P&L account, I mean profit and loss account data to provision for bad and doubtful debts 12,000. How it will come? See here in your textbook 294, 9 plus 5 minus 2. So 9 plus 5 is 14, minus 2, 12. So see here in the balance sheet, P&L account, just you show all the profit and loss account. Just we want to apply all the provision, bad debts and additional bad debts in the P&L account and debit side children. So first we have to write bad debts 5,000 and to provision for bad and doubtful in closing. Okay, 5,000 for the adjustment inside your sums you have 5,000 you have to apply. And addition bad debts 4,000 you have to write, and provision for bad and doubtful debts is opening in that sums. You have provision for we have to write in that column. Next one, how we are shown in the balance sheet. Sundry debtors account 1,04,000 minus additional bad debts 4,000 we have to less, and we have to less the provision for bad and doubtful 5,000 we have to. We are calculating the 5% sundry debtors. In this amount also we have to subtract the sundry debtors. So totally 95,000 and we have to write in the outer column children. Can you understand children? Let's see the exercise sum children. Please copy it and write your classwork. See here children, let's do the fourth sum exercise, page number 310. The trial balance on 31st March 2016 shows the following. See here, sundry debtors 30,000, bad debts 1,200. It is found that 3% of sundry debtors is doubtful of a recovery and is to be provided for past journal entries for the amount of provision and also show how it would appear in the profit and loss account and balance sheet. So first we have to calculate the sundry debtors through that provision for bad and doubtful 3%. After that we have to adjusting entry and how we are applying the P&L account and the balance sheet children. Let's see your note. See here, exercise number 4, page number 310. Adjusting entries is a journal only, no? So date, particular, ledger folio, debit and credit, rupees. First of all, we are going to do the working note. Provision for bad and doubtful debts at 3% on for what? Sundry debtors. So sundry debtors 30,000. 30,000 3 by 100. So what will come? So 900. Okay children. So this is the provision for bad and doubtful debt. So now we are going to write the adjusting entry. First we have to date. In this sums we have a date now. So we have to write. So 2016 March 31. Okay. So what is the entry for provision for bad and doubtful debts? P&L account debit to provision for bad and doubtful. Already we saw the theory, no? So profit and loss account debit to provision for bad and doubtful debts account. Okay children, how much? 900. Here also 900. So what is the narration? Provision for bad and doubtful debts created. Okay. CREATED created. Let's how we are shown in the P&L account. I mean profit and loss account for the year ended 31st March 2016. So first we have to write the table column, debit side, and you should write in the debit and credit, particulars to amount column, particulars to amount column, debit side and credit side also. Bad debts or provision is all in the one of our expenses. So we have to write in the debit side of the P&L account. So first we have to write 2 bad debts. So 2 bad debts, how much? 1,200. You have to just apply, no need to add. So write in second column. Next, 2 provision for bad and doubtful debts. Okay children, how much? 900. No need to add, just to apply. Next, to the balance sheet. Balance sheet as on 31st March 2016. See here, balance sheet, liabilities, to amount column, assets, to amount column. So in this expenses, we have to write in the asset, bad debts, provision, everything. We have to shown in under the sundry data. So first we have to write sundry debtors. Okay, how much? 30,000. We have to calculate in the 30,000. 3% we calculate in the 900 now. So we have to subtract in that sundry data. So less, okay, provision for bad and doubtful debts at 3%. How much? 900. So what is that? 29,100. This is the final amount children. Okay. It's very simple. Just you have to write in the adjusting entry. After that, how we are shown in the balance sheet. Next one, how we are shown in the balance sheet. Okay, children. Let's see the sixth sum, children. The following are the extract from the trial balance. Sundry debtors 30,000, bad debts 5,000. Additional information. In this sum, this is very new to you. Additional information, write off further bad debts. So again we have to note in that bad debt 3,000. Create a 10% provision for bad and doubtful debts. You are record to the past necessary adjusting entries and show how these items will appear in profit and loss account and the balance sheet. Let's see. First you have to write that. See your account note, you write like this only. Exercise sum number 6, page number, your textbook 310, adjusting entry, date, particulars, ledger folio, debit and credits. First we have to write in the 3,000. Bad debts they gave now, so we have to write in the adjusting entries. So what is the bad debts entries? Bad debts account data, okay, to sundry debtors, bad debts, okay. How much? 3,000, 3,000. What is the narration? Bad debts written off. Next, in this 10% provision we have to calculate. So let's see the working note. See here, sundry debtor 30,000. In this 30,000 we have to calculate 10% of provision for bad and doubtful debts. Provision so see here children, in the sundry debtors we have to subtract the additional bad debts. Okay, so 3,000, 27,000. So this amount, in this amount only we have to calculate how many percentage? 10% of provision for bad and doubtful debts. So right here, provision for bad and doubtful debts at 10%. So 27,000 into 10 by 100. So what is the 2,700? This is the provision for bad and doubtful debts. So in this amount we have to write in that journal entry, adjusting entry. So what is that adjusting entries? So P&L account data to profit and loss account data to provision for bad and doubtful debts account. How much? 2,700. Here also 2,700. What is the narration? Provision for bad and doubtful debts created. Okay children, that's it. So adjusting entry is over. Now we have to, how we are going to show in the balance sheet. See here, profit and loss account for the year ended, particulars, amount, to amount column. Okay, here also particulars, amount rupees. So we have to apply the P&L account. Okay children, to bad debts. How much? See here, 5,000. In this bad debts we have to write here. So $5,000. So see here, bad debts 5,000. We have adjustment, no? So add additional bad debts. 5 means in this bad debts we have in the adjustment. Okay, additional bad debts we have to add. So 5,000 plus 3,000, total 8,000. Next, to provision for bad debts alone you have to add, other than no need to add. Provision for bad and doubtful debts. Okay children, 2700. Already we calculate 10% no, the amount alone we have to write in the sheet. Just you shown in the P&L account. See here children, now we are going to do the balance sheet. Balance sheet as on 31st March 2000. We are not have any dates in this sum, so no need to write anything. Just we have to write balance sheet. Liabilities 2 amount column, asset 2 amount column. Okay. In this sundry, all the bad debts and provision we have to show in the debits asset side in this sundry debtors. So sundry debtors 30,000 minus bad debts written off. In the additional information we have now, in this amount we have to subtract the sundry debtors. So 27,000 and minus less provision for bad and doubtful debts at 10%. We calculated 2,700. So we have to minus 27,000 and less 2,700. Lastly we get 24,300. This is the amount children. This is the sum. So first we have to adjusting entries. After that working note. Okay. In this working note, just we have to show in that balance sheet, profit and loss account, bad debts. Additional we have to add the additional bad debts and then shown in the provision for bad debts. Okay, 2,700. So in this balance sheet include the sundry debtors. We have to show all the bad debts, provision for bad and doubtful debts children. That's all. See here children. Let's see the 8th sum. The following are the extras from the trial balance. Sundry debtors 50,000, discount on debtors 2,000 and bad debts 3,000. In additional information, create a provision for bad and doubtful bad debts 10% on sundry debtors. Create a provision for discount on debtors 5% on sundry debtors. You are required to the past adjusting entries and show the show how these items will appear in the final accounts children. Let's see. See here sum number 6, page number 311 and adjusting entries. Date, particulars, ledger folio, debit, rupees, credit, rupees. Okay. First we have to write in that journal. See here sums. Create a 10% sundry debtors. So first we have to write provision for bad and doubtful debts. Let's see. Sundry debtors 50,000. So in this 50,000 we have to calculate 10% on provision for bad and doubtful debts. So 50,000 into 10 by 100, 5,000. So less provision for bad and doubtful debts at 10%. How much? 5,000. So you have to subtract 45,000 children. In this 45,000 we have to calculate that discount on debtors 5%. So less provision for bad and provision for discount on debtors. Provision for discount and sundry debtors. So see here 45,000 into 5%. So 20. See here 5 5 are 25, remaining 2, 4 5 are 20, 22. So 2,250. This is the provision for discount on sundry debtor children. So you have to subtract. So what is the net amount? So 250 or 750, 250. So 45,000 minus 250. Okay. So 5, 4 minus 2, 2, 2 minus 2. So 2,500
45,000 minus
மைண்ட் ஒர்க் ஆகல.
250 அப்போ 750 வரும்ல, ஒரு 7 41 750. இல்லை நான் போட்டு பார்க்குறேன் கரெக்டா?
இப்படியே போடுங்க, கரெக்டு தான். இங்கே பாருங்க, 9ல் 2 போச்சு 7, அப்புறம் இது 4ல் 2 போச்சு 2. கமான் வெயிட், ஐ ஸ்டார்ட்.
So 45,000 minus 2,250 is the final amount 42,750. Okay children, so right here 42,750, not 250. Okay, let's do the adjusting entries. Profit and loss account data to provision for bad and doubtful debts. How much? 5,000 children. Narration. Provision for bad and doubtful debts created. Okay. Next entries are the same. March 31st. Profit and loss account to provision for discount on debtors account. Okay, provision for discount on sundry debtors. How much? 2,250. Here also 2,250. Let's see how we are going to apply in the P&L account. See here, write the heading P&L, profit and loss account for the year ended 31st March 2016. Debtor, credit side, particular to amount column, credit side also particular to amount column. So just we have to apply all the to debit side, we have to apply all the one. Okay, first we have to write in that. See here, sum la irukka, and we have to write in the trial balance of bad debts. Okay, so 2 bad debts 3,000. Next, 2 provision for bad and doubtful debts account. How much? 5,000. Okay, next 2 provision for what is that? Discount on debtors, discount on sundry debtors account. How much? 2,250. Okay children, next we have to write in that, in this discount on debtors also we have to write in the P&L account. Next one, 2 discount on debtors. How much? 2,000. That's all children. Next we are going to do this P&L account. In the sums we have a date, isn't it? So balance sheet as on 31st March 2016. See here, liabilities to amount column rupees, and asset side also, credit side also, asset to amount column rupees. So first we have to write sundry debtors 50,000. So provision for bad and doubtful debts 10%, we have to calculate now. So 50,000 into 10 by 100. How much? 5,000. Less. So final account, finally we got at 45,000. So in this 45,000 we have to calculate 5% of sundry discount on debtors. So how much we get? 2,250. So 45 minus 2,250. So final we will got at 42,070. See here, 45,000, 2,250, 42,070. This is the final account. This is the final amount, children. So we prepared adjusting entries, profit and loss account. We are not have any return of bad debts, so no need to write adjusting entry. Profit and loss account data to provision. Profit and loss account data to provision discount. So I have created 2 adjusting entry, and we have to apply in this P&L account and debit side, working note also, and balance sheet also, children. You check whether you are correct or not in this working note. That's all the sum, children.
I hope you all understood. For exercise 4, 6 and 8 children, please copy it and write your classwork. Complete your classwork first. Today task 3, 5 and 7. You complete all the exercises in your classwork children. In this sums you have any doubt, please contact my WhatsApp number. Thank you.